In this video, I'm going to be discussing with you, showing you live examples of two trades that we picked based on our cash flow trading frameworks. And of course, like I used to explain, I at Potential Miners International, I've always said it that we have three types of models. The first one is what we call the uh, project model. The second one is what we call the investment model. And the third one, which is what I want to focus on in this video, is what we call the cash flow model. This is the model that we believe that as a forex trader, you are expected to be able to, you should be able to apply this model and cash in on daily or weekly basis as the market gives you opportunity. So I'm going to be showing you the two different models and how I pick trades on them today. You know, this cash flow model, we have two frameworks. The first one is what we call the cash flow money box framework. I'm going to show you and how I pick trade on it. And the second one is what we call the news release framework. Okay, because of time, let me quickly, I don't want this video to be long. Let me quickly show you. In fact, the two trades are still running. And of course, I will show you in the video how we pick each of the trades. And of course, after we have picked the trade, we don't know what will happen in the market. We want to trust the market to do justice, and we expect that on the long run, we will fall on the positive side of probability more than on the negative side of the probability. Of course, and that is what established our head. So let me quickly use this first one to explain the news release framework as the trade is still running. Today we have a news. Today is 2nd of September, is a Tuesday. We have a news on ISM manufacturing PMI, and this is one of the leading indicators. And of course, this is one of the soft data that oftentimes analysts released, via this Forex factory. And of course, for people that know how to follow it, if there's no cluster of this soft data, you can strategically position and still take trade with it. However, it is very important for you to know that to a large extent, the hard data is what you really want to bank on. You know, on most cases, hard data is predictable more than soft data. This is a survey and is in form of index. We call it Purchasing Managers Index. ISM is an institute for supply management, and they come up with this measure of index, and this index has implication on the performance of the industry. In this case now, we have the manufacturing industry, and of course, the interpretation of the index is if the index is above 50, that means that the manufacturing sector or industry is performing or is expanding. And of course, if it's below 50, it means the manufacturing industry is contrasting. So in this case now, the previous data was 48.0. Now the forecast was 49.0. By the time the data was released, we noticed that the data release was less than the forecast, which is now 48.7. On that premise, plus the fact that we know that Euro USD is on a buy bias in overview. Can you see this? This is our trend evaluator. We use this to gauge the trend of the market per time. So coupled with that, and with the fact that, or the understanding of the market risk overview, which is risk on dollar aversion overview, we now decided to trade Euro USD. And this is how we position for the trade. Like I used to say, we take our trade on the 5 minutes time frame for news release. And of course, immediately the news is released, we want to wait for average of 10 to 15 minutes before we can pick our trade. And that's what we usually do. We wait for average of 10 to 15 minutes, I want this chart to load so that I can show you step by step. Okay, now, so uh, I want you to watch this very closely. I've said this over and over on news related videos that I've released. But in case you are seeing this for the first time, what we usually do is that there is a preliminary analysis that we usually do. And during this preliminary analysis, we analyze the pair that we are expecting to trade the currency with that news release with. If the data is good, we identify currencies that will trade the currency with. If the data is bad, we also identify currencies that will trade it with. And of course, in addition to that, we now calculate the average stop loss for our trade. So we go to the 5 minutes chart. So the news was released around 3 p.m. today, 3 p.m. And of course, we waited. This is 3 p.m. This is 3 p.m. Can you see it now? Let me zoom in so that you can see very clearly. This is 3 p.m. We wait for average of 10 to 15 minutes. 3:05, 3:10, and of course around 3:15 we want to look out for any of these three things. You are looking out for either a fair value gap created by the pricing in of the data release, another block, or an engulfing move. So we were able to identify this fair value gap. This is how we pick the trade, and of course there is no emotion. We just do this as if we are robots. There's no emotion, there's no panic, whatever they trade, except if you don't want to trade in the financial market, in the forex market. There is no how you will be able to predict the outcome of any trade. So except if you want to probably drop forex trading for other things, even when all your conditions are met, you can't predict the outcome. So you have got to learn to trade like a robot. Once your conditions are met, just enter the trade. Leave the rest to the market. You get it now. So let's see now. This was the fair value gap that we identified, and our trading rule says that we are to position our trade below the high of the fair value gap. Below the high. This is it. Our stop loss estimated prior to the news release was 15 pips. 15 pips. And of course, we are expected to take ratio 1 to 3. Ratio 1 to 3. You see this, you see the trade now. This is the trade. And you can see that at the moment, the trade has just picked me some minutes ago. It was running very close to my stop loss. We don't know what will happen, and now it's turning. Probably the market is going to give us, that profit. Of course, we are not to. There's nothing you can even do. Once you enter the market, there's nothing you can do. You know, so we have entered the trade now. We set our parameters, and the market has picked the trade. Currently, the trade is still in the loss. We are expecting that if probability will fall on our favor, this trade will give us ratio 1 to 3. And this is how we position. For news release framework, this is how we position. However, if this trade now start to move down and stop us out, there is no emotion, there is no worries, because we have applied, we have fulfilled all the conditions. We waited for all the conditions to be met. This is one of the framework of our cash flow model at Potential Miners International. Of course, I've said it, I will continue to release videos like this using example, live example. This is a live example. In fact, if somebody is listening to me live now, this trade, that person can still enter the trade, because the trade has just triggered us and is still in a drawdown. Somebody can still enter this trade. Suppose you are listening to me live. You see, now this is how you have to learn how to trade in the forex market. Remove all emotions, remove all form of, somebody is saying this, somebody is saying that. Focus on your trading rules. I'm going to show you the second framework of our cash flow model, the trade I picked on it, today I picked it today, and the trade has already done around ratio 1 to 2. I'm going to show you is on gold, so that you will know that whether you want to trade the news or you want to trade another strategy apart from the news, if you have a trading system that with an hedge, you will always make money in the market, especially on the long run. This is the trade now. This is the trade. I'm going to clear this chart now. Let me just hide this. This is cash flow. Let me hide this so that we pick the trade together. Now, if you are listening to me, if you have been following me on this channel, you will know that when we are to pick trade, the first thing we look at is the directional bias, and that is done on the weekly with this free tool. This is a free tool that gauges the direction of the market. We don't want to stress ourselves that what is the direction of the market at this point. This tool will tell you at a glance. So we know that the market the directional bias for gold as of today, 2nd of September 2025, is a buy. So we move to the daily. On the daily, we want the market structure to be in favor of the directional bias, and you can see, in fact, I picked this trade. This was a trade. I picked it, it delivered, and of course, because the market structure is still in favor of the directional bias, then you move to the 4 hours. This is where you look out for your cash flow money box, and this was the money box that I cited this morning. I saw this money box this morning, and of course I labeled it. No, was it this morning? It was yesterday. I saw it yesterday, so I labeled it. I waited for the price to come down. I saw it around yesterday or so, if I'm not mistaken. I waited for, okay, it was today. I saw this today. The one I was talking about is on GBP JPY. So I saw this today, and this is our cash flow money box. Like I used to say, for the cash flow money box framework, your entry time frame is the 1 hour. So immediately the price, or the market price into the cash flow money box, you have to go to your 1 hour, and on the 1 hour you are looking out for an engulfing move with 2 consecutive candles, an engulfing move from the cash flow money box with 2 consecutive candles showing an engulfing move, and that is what you will mark as your entry box. I marked this, that was how I marked it. This was the entry box, and like I used to say, for this you position at the tip of the entry box, your stop loss, slightly below the lowest low of that entry box, and you have to take ratio 1 to 3. This trade has already done. In fact, I'm already on break even on this trade. So whatever the market decide to do for this particular trade, I'm good. We are already on break even. Can you see it now? You see, so from the weekly is on a bi-directional bias. Daily, you look at the market structure. I've said this over and over. Even if you are scalping with whatever strategy, always ensure that you check the daily and you will trade in the direction of the market structure. If the market structure is a buy, you are expected to be taking buy. If the market structure is a sell, expectedly you should be selling. So we check the daily for market structure. We saw, of course, the market structure has been a bullish market structure since 22nd of August, and of course it's still maintaining that market structure. So we go to the 4 hours chart, which is this is where we pinpoint our cash flow money box. Then we identify a cash flow money box. A cash flow money box is an order block created by a break of structure on the 4 hours. An order block created by a break of structure on the 4 hours. That is our cash flow money box. So then you move to the 1 hour chart. Once the market price into the cash flow money box, you are waiting for an engulfing candle with two consecutive candle. If it's a buy, you will be looking out for two consecutive bullish candle. If it's a sell, you'll be looking out for two consecutive bearish candle that engulf inside the cash flow money box. And of course, once you side out your position for your trade and you take ratio 1 to 3, this is how we trade our Potential Miners International. You can see that this is a live trade, it's already running, although I'm on break even on this trade. However, this trade can still turn from where it is now and still come down and stop us out at break even. Anything can happen in the market. The same way Euro USD, the same way Euro USD. Let's check. Anything can happen. You see, this is still this is a running trade. This trade can from this place now stop us out. And of course, this is how the market is designed. You win some, you lose some. But the hedge is in the fact that when you lose 1% if you are trading 1% of your account. But when you win 3%. For instance, we recommend that on the cash flow account, you should trade 5% of your account. So if you lose now, you lose 5%. Because this is a cash flow account, we expect that you have project account separate, you have investment account separate. But for cash flow account, trade 5%, which means you will enter 20 trade with your capital before you can blow the capital. In fact, at Potential Miners International, it's almost becoming impossible to blow a capital, because to blow your capital means you will enter 20 trade and you will lose all the 20 trade, and it's almost impossible with our trading system. This is not to brag, but based on the statistics and the performance of the trading system over time, it's almost impossible for you to enter 20 trade and lose all the 20 trade. So which means that for the cash flow account, if you win 15%, but when you lose 5%. You see, this is how you trade without no emotion, because if you don't understand how the market works and you come with a lot of emotions, believe me, you will burn your fingers over and over, and your conclusion will be that Forex is a scam, or you say it's not for me, or you say this thing is not working and it's not going to work. You see, this is how we trade, and this is how we approach the Forex market at Potential Miners International. And if you are listening or seeing me for the first time, I'm Mr. Akimode, the King of Waves. I will encourage you to subscribe to this channel and stay glued to this YouTube channel, so that you will be one of the first people that will get videos that I will be uploading looking forward. Until I see you again in the next video, thank you for listening. God bless you.